Ask Annex. As always, got a question for us, you head to our website, annexwealth.com. Look for the Ask tab. Drop your question in. If you want to be anonymous, that's fine. If you want us to use your name, that's okay. Don't want this to wind up on the radio at all, that's cool, because we get back to everybody. In the studio, Matt Morzy, Investment Team Manager, CFP at Annex Wealth Management. Welcome.
Hey, Danny.
Trevor Nargis is a Senior Trader. Welcome.
Hey, Danny.
Got these guys in. They take an active role in the Annex Wealth Management SWAT podcast. We thought we'd lean the segment today toward the investment questions that we've been getting. And our first one is anonymous. I think this one is fascinating because we are in earnings seasons now. And the question is, what does the Annex team listen for during earnings calls?
Yeah, it's very timely. And, we got a team of people who are tuning into these earnings calls, digesting the information that's coming out. Jason Cooper, I want to give him a shout out. He's kind of our head equity research analyst and does a lot of that work for us. There's a lot of useful and valuable information that can be obtained from earnings calls. But we'll hit on a few of the things that we like to listen for. So one item would be paying attention to what's happening from a trend standpoint in both the company that you're listening to the call for, as well as the broader industry that they're in. We like to hear what companies say about their position within an industry, what trends are shaping up or taking place in that industry, and how their approaches and outlooks may change as a result of those trends. This type of information can be really helpful in assessing how a company may be gaining, maintaining, or losing market share. We also like to listen for commentary that could impact other industries or other investments, right? So you have one company talking about, hey, we're seeing this happen in our industry. How might that impact what's happening in another industry, or how might that change outlooks in that industry?
Yeah, I think one thing just to keep your eye on, too, when you're going through those earnings calls is those are the executives for that company. And part of their job is to be cheerleaders for their company as well, too. And that doesn't mean that they're going to go out of their way to suppress bad information, although that certainly does happen as well, too. But you want to keep mind of what the tone they're using. And you want to fact check what they're saying as well, too, by going through their earnings reports, all their filings as well, too, to make sure that what they're saying on those calls is accurate to that, and that you're not living up to the hype or going with the hype that they might have through a call.
Right, and that goes back to overall assessing the information that's being derived, not just taking it in stride and saying, okay, good to go. We like to look at the information that management is giving to analysts, but we also want to be cognizant of the quality of that information, as well as the overall transparency of the management team with analysts. You don't want to see analysts not on good terms with management, because that can be indicative of management potentially trying to do something like Matt alluded to, of looking really good in the short term at the potential expense of business outcomes in the long term.
Yeah, I think that's a really good point, because the questions that get asked during those calls are really important. They tend to draw more information out than what those executives are coming into that wanting to give. And so they end up being more honest or truthful through a lot of that, because they get put on the spot with the questions that are asked.
I've seen some times when it gets contentious, though.
Oh, it certainly can. If your company's not doing as well as analysts thought they were going to be, or maybe they're in a downward trend like Trevor mentioned before, those calls certainly can get a little bit more out there, have a little bit more of a fight during some of those calls as well, too, to pull that information out and to get that correct information.
And what's really valuable about that as well is that type of discourse can really help investors get a good gauge of potential risks to a business or even a broader industry as well.
And we listen to a ton of these things, right?
They're fun. Yeah, we do.
I don't know if it sounds all that fun.
For some people, going through 10Ks and reading 10Qs and whatnot is not all that fun, but luckily we got people who are kind of wired that way.
Well, here's the beauty. We're doing this on behalf of our clients, so they don't have to.
Exactly.
Next question on Ask Annex. Can you explain how a company's dividend policy can affect its stock price, and what factors I should consider when evaluating dividend-paying stocks?
Yeah, that's a great question. First is to really understand what that policy is. So companies can pay out dividends in many different ways. Sometimes it's percentage of what their profits are, and they want to keep a consistent percentage that's being paid out. So from quarter to quarter, that dividend can fluctuate quite a bit because it depends on how profitable they were that quarter. Other companies have more of a stable dividend policy where every single quarter we're going to pay out a quarter. And then next year we're going to look to raise, or we're going to pay out 26 cents or 27 cents every single quarter. And they're looking to keep us a constant dollar amount that they're going to increase over time. So understanding really when you're going to get paid, how much you're going to get paid is really important. You also want to take a look at is how sustainable is that dividend going to be? Are their profits enough to cover what that dividend is going to be? Are their profits sustainable? Are there risks ahead that they're going to see? And are they going to be able to grow that dividend over time is really, really important. And then lastly, from my point of view, is has that company ever had to cut their dividend in the past? That is always a very negative signal to investors as well, if they've had that history where it's touch and go on it. So companies really want to keep that dividend stable, but you want to look through that history as well.
you hit it all right on the head. Only other things that I would add from a sustainability standpoint are looking at things like the dividend coverage ratio or the dividend payout ratio. For those of you who don't know, the dividend coverage ratio is the number of times that a company could pay its dividend to shareholders. Are they generating enough net income to really be able to sustain and pay out that dividend? And then the payout ratio would be how much of the net income is paid out as dividends. So if a company is paying out a lot of its net income in the form of dividends, it means that it's not retaining as much of its earnings. That might be more of an income-oriented stock for investors.
Two people from the Annex Wealth Management Investment Committee. Let's put a little plug in for our Annex Wealth Management SWAT podcast every Monday morning.
Yeah, that's a lot of fun for us as a team to put together. We really enjoy getting the feedback from it as well, too. But that's something we get to come together as a team and put out to the public of here's what we're thinking.
Trevor Nargis, Senior Trader, thanks.
Thanks, Danny.
Matt Morzy, Investment Team Manager, CFP at Annex Wealth Management, thank you.
Thank you.